The announcement of these potential tariffs on Mexico, you're seeing the market sell off by about 1% today. What do you think the proper way of viewing this is? Is this an appropriate sell-off? Do you expect more?
So look at this away from economic policy. Just look about business exposures. Autos trade between Mexico and the United States. It's about $250 billion of auto parts imports from Mexico to make about $500 billion of final autos product inside the United States. Higher tariffs are going to have an impact on that. So it's going to hurt the bottom line for particular companies. And in general, this issue now of bringing non-trade issues and trade issues together with tariffs is reducing confidence that we're going to be able to settle trade issues quickly and easily.
Look, I think that's the bigger point here. We've had several people around the table say they don't think these tariffs will ever come into play, even though it's only 10 days away. But I think by introducing this and using tariffs as a weapon, even when it's not about an economic issue per se, when it's not about free trade,
right,
that kind of changes the dynamics, and I would expect would put business people in a little bit of a paralysis, and maybe you don't see capital expenditures.
We're left guessing. We think that this is a large issue for corporate profits generally, whether this is around the world, whether this is U.S.-Mexico. And that is going to be something that should weigh on markets. We've thought that this was a plus or minus 10% issue. If there were no unintended consequences, but just the impact on large company profits from paying these tariffs, that is something that can disrupt markets.
What happens if new NAFTA, USMCA, is not approved either in Mexico, through our Congress here? I know that the administration, Mick Mulvaney, has said that it's not related, but it's hard to not put the two together when Mexico's Senate just took this issue up yesterday and when our House is refusing to bring it to a vote.
Well, do we fall back on NAFTA or do we remove NAFTA? That's a question then, again, with business with Canada. Right. Again, will be another question on this. So, again, we're left with this. We have U.S. equities up at 55% of global index market cap, world market cap. They got there through globalization, and that's a very high level, and there's a lot of profits moving cross-border, and a lot of these things are at risk. Now, again, if this is all resolved quickly, we have a sound economy. We could rebound from this. We want to be very careful here that when you build up a lot of anxiety about these issues, sometimes there can be roaring rebounds if these things come into the play. This is one of those rare cases where, again, in a news-driven market, where we see particular conditions in markets now where it's one or the other, it's bullish or bearish around this, that this is one of the times where hedging portfolios is really, really the time where it's priced for that. And we want to just be very careful around this particular issue. We had some serious risks in financial markets over monetary policy last year, and this is just another big challenge.